it's always good to have a positive trading mindset. Trading mindset, or what we call the trading psychology. Today, I'm not going to cover about the in-depth about the trading psychology. Today, I wanted us we look at how to build a winning trading mindset, because this is one of the least talked about aspect of trading, and it plays a very crucial role towards your success as a trader. So, also in addition to that, I'm also covering today's session is also about question and answer. So any question that you have about the Forex market, about market analysis, any question that you have, kindly comment there so that I'll be able to answer all the questions that you'll be having. Our director, I will need to have the phone so that I'll be able to answer all the questions. Also, kindly note for me those questions that people are asking so that I'll be able to cover both of them at the same time. So how many likes do we have, since I don't have my phone with me at the moment? Okay. So good people, it's another day to explore the world of Forex. Today it's just helping you to build up, or it is helping you to fortify your trading mindset. Because one thing we realize about trading is that your mindset is the greatest asset you have when it comes to trading. And today we are going to look at how can you as a trader, since you already have the basic knowledge about what is Forex, what is trading in the Forex market, you already have the knowledge about the market analysis, maybe even you have you have a trading strategy, and maybe you have backtested it. Now the last part about trading, or the last part about now trading, is how to build or how to fortify your trading mindset so that you may experience greater success in trading as well as minimize risk. One thing we realize about trading is that trading is not just about the basics. Trading is not just about the basics. It's not just about the trading strategy. It's also about how well you are able to master your trading psychology. It's also about how well you are able to fortify your mindset so that emotions plays a very little, or sorry. Trading is not just about having a trading strategy. It's not just about having the basics about trading. It's also about how well you're able to master your trading psychology, or what we call how well you're able to master your trading mindset. So if you have any question, kindly comment there so that I'll be able to cover all the questions. I can see get me to 2,000 likes so that we can be able to start. Somebody is asking about the Fibonacci retracement. Yes, for sure. Today is a very good day to talk about the Fibonacci retracement. Kindly stay tuned in. Gidi. Hey, Gidi is my friend. How are you, my friend? So for those people that are new, for those people that are joining us, we have been having a series where we have been covering about from the introduction. We have been covering also about the different trading strategy. Today, our today's session is very simple, is very short. It will be very brief. I want us to cover about how to build a winning trading mindset. By the time you're covering this small topic, I'm assuming you already have a knowledge about market analysis, or you know when to actually buy any currency, when to actually sell, as well as when to stay away from the market. I'm also assuming that you have in-depth knowledge about market analysis. You have already developed a trading strategy. So the remaining part of trading now is what plays like 80% towards your success, because in trading it's what we call trading is 20% strategy and 80% trading psychology. Today, I wanted us to look at how to build a winning trading mindset, because I realize is that one thing we realize is that your mindset is the greatest asset you have as a trader, and the goal of any trader should be to trade with little emotions as possible. So, because we all know emotions usually impact our trading decisions. Emotions such as fear, anxiety, greed, overconfidence, sometimes even frustration in the market, they can really impact your trading decision, whereby if you let emotions to really impact your trading decision, it's easy for you to start taking random trades. It's easy for you to start taking up random trades. So for today, how do you build a for today now, how do you build a very solid trading mindset? So today we will dive into the secrets of trading mindset by revealing the the psychological tools and strategies that separate the real forex traders from the rest. And today, how do you actually build a winning trading mindset? So the first thing that I wanted us to look at, if you really want to build a if you really want to build a winning trading mindset, the first thing you should have is a trading plan. We have said that emotions usually impact our trading decisions. Now, if you want to really have a very solid trading mindset, is the first thing that you should have a trading plan. For those people that don't know what a trading plan is, think of it as a roadmap to success. Okay, like assuming you want to open a business. When you want to open a business, I'm sure you usually sit down and you usually know these are the product that I will be selling. These will be the prices, these are the profit margins. Likewise, now in the forex market, when you are beginning in trading, it's always important to have a trading plan. Okay, a trading plan is basically a document that outlines your trading rules as well as the trading strategies and as well as your trading goals. Okay, now a trading plan, we have said that it's a document that outlines your rules. It outlines your trading strategies as well as it outlines your trading goals. Now the reason why having a trading plan is very important. First, it helps you to reduce stress associated with trading. Because sometimes trading can be very mentally draining. Now having a trading plan and executing the trades according to your trading plan, it will really help you to reduce the stress. The stress associated with trading. Another reason why a trading plan, I usually find that trading plan is very important, is because trading plan, it helps you to stop over trading. Because one thing we realize about a trading plan is that a trading plan usually has a strategy. It usually has the entry criteria, the exit criteria. Now when you're executing a trade according to your trading plan, it is very hard for you to overtrade. Because it's very hard for you to overtrade when you're having a trading plan, because basically you are executing the same thing, the same strategy over and over. Another thing why I usually say that a trading plan is very important is that it helps you to build confidence. In the trading plan, there is something we call trading journal. Basically, how you keep the records of your trading. Now, having a trading plan and having executed the trades according to a trading plan, it will really help you have confidence in the market analysis, because the strategies that you'll be using are the one that you have already outlined. If it is the entry criteria are the one that you have already outlined. So so we are looking about a trading plan. You said a trading plan, it usually entails the rules that you will come up with, that will detect when you'll be entering the trade and when you will be exiting. A trading plan is also entails, or a trading plan, it usually entails the trading strategies. And the last thing we have said, a trading plan usually entails your goals. Having a trading goal usually helps you to stay disciplined and focused. Okay. Now, for those people who don't know what a trading plan entails, the first thing, for those people that are new in the forex market and they don't know what a trading plan usually entails, the first thing that a trading plan usually entails is the objectives. Objectives are basically what you want to achieve. having an objective of what you want to achieve, it will really help you to stay focused as well as disciplined. Let me give you like a very good example. Like for now, I have a pro farm account, and a pro farm account, even like now I have a $50,000 pro farm account, this $50,000 pro farm account, it has different parameters. It has different set parameters that usually help me to know when to actually. It has different trading. It has different parameters, and these parameters are usually like the targets. Now having an objective or what you really want to achieve when it comes to trading, it will really help you. I'm sorry that I've not been able to exhaust that one. Now we are looking at what basically a trading. This one is a preamble about what a trading plan usually entails. The first thing a trading plan usually entails is the objectives. What you want to be, what you want to achieve. An objective doesn't necessarily need to be that complicated. You can have like a very simple objective. I want to be targeting this amount per day. This is the risk management that I'll be using. Basically, that's a very simple objective, and it is very much achievable and measurable. The other thing that a trading plan usually entails is the currencies that you'll be trading. In the forex market, we have over 40 instruments that you can be able to trade. And it's practically impossible to analyze the 40 instruments that you can be able to trade. Now having specific currencies that you'll be trading is very important. I usually tell people, if you're new in forex trading and you're wondering which are the best currencies to trade, I usually recommend that start with the major currencies. Like the major currencies are like the GBP USD, Euro USD, we have USD JPY, we have USD CHF, we have USD CAD, and we have AUD USD. Okay, this one are usually like the best currencies you can start to trade with. The reason is when you're trading these major currencies, first of all, they are the most traded instruments, they are the most commonly traded instrument. Another thing is that these major currencies, since they're the most traded instrument, they usually have a very small spread. Okay, and as a trader, spread is some of the things that you usually choose, or some of the things that you usually consider when you're choosing a forex broker. Another thing that I usually like about trading these major currencies, most of them they correlate and they are very easy and simple to analyze. So one thing we are looking at what a trading plan usually entails. It entails the objective, the currency that we'll be trading. Also, a trading plan, it entails the entry and exit criteria. A trading plan usually entails an entry and exit criteria. What I mean by that is that each and every strategy, it usually has its own entry as well as exit criteria. So when we be coming up with a trading plan, it's good to know this. If I'm using this strategy, this will be my entry criteria. Suppose I'm using like the most common way of organizing the market using support and resistance. I can say I'm using support and resistance as my strategy. This will be my entry criteria. So nakumbuka we covered about some of the entry criteria you can use when you're using support and resistance. Like the candlestick. We also said we can use the candlestick, we can use the chart patterns. So a trading plan usually entails entry and exit criteria. Another thing that a trading plan usually entails is the risk management. Basically, when I talk about risk management, how much will you be risking per trade? How much you'll be risking per trade? It can be in terms of percentage of your account, as well as it can be in terms of the percentage of your account, or it can be in terms of the real amount. Like if you have like, assuming you have like $1,000, you can decide that I be risking 2% of my account. 2% is a percentage of my account. So 2% of my account is $20. Alternatively, it can be in terms of amounts. Like if you have like $1,000, you can decide that for each and every trade I be risking like $30. Okay. Now we are looking at what basically a trading plan entails. We have said it entails the objective, the currencies that we'll be trading, the entries and exit criteria, the risk management, as well as The last thing what a trading plan usually entails is the news and events. When I talk about news and event when it comes to trading, basically, as a trader, it's always important to know. It's always important to know which are some of the currencies that can really, which are some of the news and economic data released each and every day that can impact your trading strategy. Okay, so today we are looking at, for those people that are joining us right now. Today we are looking at about how you can build a winning, how you can be able to build a winning trading mindset. So now, the first thing I'll say that is basically have a trading plan. I've shown you some of the what basically a trading plan entails. It entails the objectives, the currencies, the entry and exit criteria. It contains the risk management. Basically, how much will you be risking per trade, as well as the news and event. Always factoring some of the news and economic data being released each and every day that can impact the trades that you are taking. So now, lastly, about a trading plan, the last bit about a trading plan is that how can you create your own trading plan? So now, how can you as a trader create your own trading plan? So now, the first thing that I usually tell people, if you want to create your own trading plan, the first step should be start by running different strategies. You know, if you want to create your own trading plan, start by running different strategies. You know, we have said some of the components about a trading plan is that it should have the trading strategies. You know, if you want to create your own trading plan, the first thing you should have is have different trading strategies, and those trading strategies are the ones that really resonates with you. So, you know, because one thing we realize is that in trading we have hundreds of thousands of strategies, and all those strategies they usually work. So, you know, utapata kuna ICT, kuna SMC, kuna hizi support resistance, kuna hizi trend lines. All those are different trading strategies. You know, you don't usually in trading I usually recommend that make your trading to be very simple. You don't necessarily need to have like 50 strategies. Okay, you can have one or two strategies that resonates with you, that makes most sense to you, and are the one that you understand it the most because you have practiced it so many times, and you don't usually require like so many strategies, just one or two that makes most sense to you. So if you want to create your own trading strategy, the first thing that you should do is that start by running different trading strategies. Secondly, if you want to create your own trading plan, is that have risk management techniques. Master If you want to create your own trading plan, it's always good to master different risk management techniques. Each and every Friday or each and every time you usually have this trading session, if you're having like the free Forex bootcamp like that for the next week, I usually show you the different trading risk management techniques, such as putting a stop loss. That is like the most basic, about calculating the position size, about being disciplined. Now if you want to create a trading plan, the first thing I said, learn different trading strategies, identify one or two that resonates with you. Secondly, have different or have risk management techniques. These techniques are very much important because risk management techniques are very much important because it is what will help you to protect your capital. Thirdly, is keep records. Now we are looking at creating your own trading plans. The first thing I said, have a different trading strategies. The second one we have said, have risk management techniques. The third one is keep records. Now in a trading plan, one of the things that a trading plan entails is records. If you want to know the effectiveness of a strategy, if you are recording. If you want to know the strengths or the weaknesses of any strategy, if you are recording. If you want to know like the most common trading mistake that you're having, is if you are having a record. Now creating your own trading plan, it requires strategy, it requires risk management techniques, as well as keeping records. Now this one was gas, but I hope iko sawa. So guys, don't forget to put up the screen and share the live. Put up the screen and share the live, because for today, if you have any question regarding the forex market analysis or anything, kindly comment there, so that by the time I be finishing up with the how to build a winning trading mindset. Yeah. By the time we be finishing on how to build a strong trading mindset, I'll be covering all the questions that you have. Kindly, if you have any question, comment there, so that I'll be able to tackle all the questions that you have. Now, let's start from what we had already covered. We are talking about how to build a winning trading mindset. The first thing that we are saying, that if you want to have a very good trading mindset, is that have a trading plan. And I've shown you what basically a trading plan entails. Now, if you want also to know, if you want to build a winning trading mindset, the second thing that you should know is that kindly ask yourself, what type of a trader am I? What type of a trader are you? Now we have different types of trading strategies, or we have different types of traders. We have like the scalpers, we have the day traders, we have the swing traders, and we have position traders. One thing we realize about all these types of traders, they usually use like different time frames. Like scalpers, they usually use like the 1 minute, the 5 minute, and the 15-minute time frame to analyze the markets. We have the day traders. For the day traders, they usually use the 30-minute, the 1 hour, the 4-hour time frame as the time frame to analyze the forex markets. Then we have swing traders. Swing traders, they usually use higher time frames. They usually use like the 4-hour, the daily, and the weekly time frame to analyze the forex market. Lastly, we have the position traders. Lastly, we have the position traders. These position traders, they are the bazoo of the market, because these one are the most patient type of traders. This one, they can hold trades for several weeks to several months, and they usually use like the highest time frame in terms of analyzing. In the forex market, they usually use like the weekly and the monthly time frame to analyze the forex markets. Now, if you want to build a very solid trading mindset, you must be able to discover which type of trader you are. And this type of traders, it usually goes with people's personality. Like utapata yule mse mwenye anakuanga like the most patient, utapata swing trading and position trading strategies are the most, they really resonate with him. Also, for people that are the least patient when it comes to trading, ama personality yao anakuanga wale watu wenye hawakwangi very patient, utapata scalping strategies are the ones that they resonate most with them. And then kuna traders wengine, they are not that patient and they are not that less patient. Utapata wao is what we call the day traders. If you want to build a strong trading mindset, it is important to ask yourself, what type of a trader am I? Hizi ni series zenye tunakava leo. These are some of the least talked about aspect of trading, and it plays a very crucial role towards your success as a trader. Another question that you should ask yourself when it comes to trading is, what strategies will you be using? What strategies will you be using? If you want to have a strong trading mindset, it is important to have already defined trading strategies. We have different trading strategies. Kuna hizo akina SMC, ICT, kuna hizo support, resistance, trend line. At least if you want to have a very strong trading mindset, it is important to have different trading strategies. Another thing that you should have when you want to have a strong trading mindset is that usually have risk, usually have risk and position size. Have risk and position size. What do I mean by this? What I mean by this is that basically identify how much you will be risking per trade and the lot size that you'll be using per each and every trade. So, if you want to have a very strong trading mindset, it is important to observe good risk management as well as know the position size and the lot size that you'll be using for each and every position. So, the goal should be when it comes to risk management and position size, the goal should be to reach the same amount of capital in each and every trade. So whether you are trading like the most volatile currencies such as gold or the Akina indices, or whether you are trading the currencies such as GBP you should reach the same amount of capital. Another thing that if you want to have a very strong trading mindset, one of the other things that you should have is, one of the questions that maybe you should ask yourself will be, since I already have a trading strategy, and a trading strategy usually have the entry criteria, what will be my exit strategies? This is one of the things. This is one of the things that you should ask yourself if you want to really have a very strong trading mindset. Remember, we said trading is 20% strategy and 80% psychology. Psychology basically is understanding the emotional and psychological aspect of trading that plays a very crucial role towards your success. Some of the questions that you should ask yourself when you are starting to trading is, or once now you already have the different strategies, do I have a trading plan? Once you have a trading plan, put a tick. The second thing is, what type of trader am I? Am I a scalper? Am I a day trader? Am I a swing trader? Am I a position trader? The third question that you should ask yourself if you want to have a very strong trading mindset is, which strategies will I be using? We have hundreds and thousands of strategies that you can use as a trader. Now, as a trader, you don't necessarily need to have like 20 strategies you don't necessarily need to have 20 strategies. Like the way when I was starting out, I used to have so many strategies, and at a point in my trading, I discovered that I was having like analysis paralysis. This was because some strategies that I had run earlier, they were showing me this is the best time to buy. Other strategies were showing me this is the best time to sell. Others were showing me this at the moment you should not take any trades. Now in trading, you don't necessarily need to have like 10 strategies. You just need to have one or two strategies that really resonates with you. Also, if you want to fortify, or if you want to have a very strong trading mindset, the other question that you should ask yourself is, what will be my exit strategies? Now your entries are always important as your exits. You don't want to be in a situation whereby you have taken a trade. You don't want to be in a situation whereby you have taken a trade, it has made you like $700, and you end up closing with $10. Now your entries are as important as your exits. Another thing that you should consider if you want to build a strong trading mindset is, or another question that you should ask yourself is, are there days or occasions that when I will not be trading? Are there days or occasions whereby I will not be trading? One thing we realize about the forex market is that you cannot capture all the pips that occurs in a day. Now there are some exemptions, or there are some days whereby you will discover that not each and every day is a good day for trading. Like for me, let me give you like a very good idea. For me, most of the time I don't usually trade the news, and most of the time I don't usually trade the news, and that is usually like some of the occasions that I don't usually trade. Also, when we have like bank holidays, that's when we have like there is volatility in the market. Okay. Now for me, One of the things that I did so that I can be able to have a very strong trading mindset is that I really sat down and asked myself, are there the questions that you should ask yourself when it comes to trading? So, the first rule is that you should understand that emotions usually impact your trading. Okay, they can impact your trading decisions. Emotions such as fear, anxiety, overconfidence, sometimes even frustrations can really impact your trading decisions. Now, if you want to have a very strong trading mindset, you must understand that emotions are normal, and they should not in any way impact your trading decisions. So the next thing now should be, how will I be able to control my emotions so that they don't in any way impact my trading decisions? Lastly, about how you can be able to have a very strong trading mindset is that self-awareness. There is something we call self-awareness. Now, self-awareness basically understand what is your trading style as well as what is working, what really works on you, as well as your weakness when it comes to trading. So, like when you know this strategy or when you know this is what is working for you, it's always it becomes easier for you even to attain success when it comes to trading. So for right now, since we have already covered about how to build a winning trading mindset, I'll be covering all the questions that you'll be asking. So let me go back to all the questions that you have really asked about. So is asking which is the best profile, which is the best profile account. Okay. Now I will let's talk about profiles. For those people that are new and they don't know what pro firms are, pro firms basically, these are companies that are looking for forex traders. Okay, when you have the skill and maybe the capital is one that is really straining you, because you all know sometimes capital can really strain your progress when it comes to trading. Now pro firms, they are firms that usually look for traders and they fund you. They can fund you from $5,000 to $200,000. Okay, now somebody is asking which are some of the pro firms that I can recommend. Okay, the first pro firm that I can recommend is FTMO. These pro firms are not in any order. Okay, the first one that I can recommend is FTMO. This FTMO is one of the oldest pro firms in the industry. The best thing about them, I've not had any complaints about them, and they're usually like more pricier than other pro firms. Okay, I usually also recommend Fivers. This is also one of the platforms that I can recommend to most people. Also, I can recommend Funding Pips. Oh, but at the moment, I'm not liking the rules because they keep on changing the rules. The other platform that I can recommend maybe to people that are really looking for these platforms, I can recommend Funded Next. These are the best platforms. I'm recommending this one because I've used all of them. I have an account with at the moment. I have an account with Fivers. I have an account with FTMO. Also, last month I had an account with FundedNext. So these are some of the platforms that I can recommend to you, good people. Musa Juni is asking, I'm new. How can I start? Musa, karibu sana. Next week we'll be having Musa, I can see that you're asking how can I start. Okay. Now next week we'll be having a free forex bootcamp. Okay. For those people who don't know about a forex bootcamp, this is whereby we usually invite people in our offices and we discuss each and everything ins and out of the forex market. Okay. We'll be covering from different trading strategies. We'll be covering about market analysis. We'll be covering about trading. We'll be covering about first of all. We'll be covering about market analysis. We'll be covering about the different trading strategies. We'll be covering about risk management. And if you have ever wondered how, like for Musa, how people make money in the forex market, next week is a very good, is a perfect opportunity for you to be able to learn about the Forex market, okay, and to be able to learn about the Forex trading. We'll be covering from the beginner, like what is Forex, what is trading in the Forex market, some of the terms and terminologies, some of the applications that you should have as a trader. We should also be covering about risk management. We shall be talking about the different trading strategies, okay? So Musa would recommend for next week, join us here on Friday on TikTok. We'll be having those free Forex bootcamp. It will be live. Also, in addition that, if in the event that maybe you want to come for the physical classes, then there is a number on the bio there. Kindly call or text so that you'll be able to book your slot for the free Forex bootcamp that is coming on Friday. Ben FX is asking, I need to know more about these types of trading strategies. Well, Ben, we have hundreds and thousands of trading strategies, okay? And we have hundreds and thousands of trading strategies. Some strategies are usually common or are most popular than others. You know, like right now, one of the most popular trading strategies is ICT. We have like ICT, we have SMC, we have support, resistance, trend line, as some of the most common trading strategies. You know, now when it comes to strategies, I've always been recommending that choose one or two strategies that resonates with you and focus on them. So, you know, once you have identified a trading strategy, go and practice it on the demo, test it on the demo, so, you know, so that you can know its strength, its weakness, as well as you can even be able to know its win rates. You know, once you know about these trading strategies, you just need one or two. You don't necessarily need to have like 20 strategies to trade at the same time. I want to cover all the questions that you have. So Musa is asking, I'm so confused, so many strategies. What are the best strategies to use? Actually, when it comes to trading, there is no like the best strategy and the worst strategy to use, okay? What matters the most is identifying a strategy that makes most sense to use. You know, because one thing we realize, we have different trading strategies. We have like the scalping, we have the day trading, we have the position trading, we have the scalping, we have the day trading, we have the swing trading, as well as we have the position trading. So, you know, all these strategies, they usually work. So, you know, it's about identifying which strategy resonates most sense, which strategy resonates the most with you, and focusing on it. Jackie is asking about Fibonacci. Yeah, we can cover about Fibonacci. So I'm just going to have a very short and brief about Fibonacci. Fibonacci is one of the most commonly, is one of the indicators that Fibonacci is an indicator, okay? Indicator, basically, these are tools in the market that help us, these are tools that help us to analyze the Forex market by providing us with a trading signal. So, you know, we have different indicators. We have like the moving average, we have the Fibonacci, we have the MACD, we have the Bollinger Bands, we have the stochastic. All those are the different trading indicators. These indicators, they help us to analyze the market by providing us with the trading signals. You know, so Jackie is saying that I should cover about the indicator called the Fibonacci. Now, about the Fibonacci. Fibonacci, it was introduced by an Italian mathematician called Leonardo Fibonacci, whereby he discovered everything in the universe rotates, or everything in the universe rotates about a certain mathematical sequence, okay? This mathematical sequence he came up with is he discovered that it applies in everything, even in the Forex market, okay? Like if you look at the petals of a flower, it usually, how our petals of a flower are usually formed, they usually follow a certain mathematical sequence. You know, if you also look at the spiral pattern, it usually follows a certain mathematical sequence. You know, now this mathematical sequence that Leonardo Fibonacci came up with, it applies in everything, and everything, including even in the Forex markets. Now there are some key things that you should note when it comes to using the Fibonacci. Now, the first thing you should note about a Fibonacci is that Fibonacci, we use it when the market is trending. So we want Fibonacci, it is best used when the market is trending. So we want to see the market when it's either bullish like this, or when the market is either bearish. It is making this series of higher highs and higher lows. That is the first thing that you should note about using a Fibonacci. So we use it when the market is trending. Okay. The other thing that we can note about the Fibonacci, we use the Fibonacci for entry and exit positions. We use the Fibonacci for entries and exits. Okay, you can use the Fibonacci as your criteria for entry as well as your criteria for exiting. So, it can show you those Fibonacci levels or those Fibonacci sequence. They can be able to show you where to exit. So, another thing you should note about the Fibonacci is that it can help you to add position. We can use the Fibonacci for adding position. Now, for this, assuming that the market was in an uptrend like this, we can use those Fibonacci to show you where you can be able to add more positions as the market goes up, or when the market is either going down. So now how I usually use the Fibonacci, allow me to add my MetaTrader 4. Now, how I usually use this Fibonacci, like for today there is this trade that I took, and I want to show you the reason why I took it. The first thing that we said that we use the Fibonacci when the market is trending. So now we want to see when the market is either in an uptrend or when the market is either in a downtrend. Okay. The second thing now you need to know is that now how once I have identified that the market is either in an uptrend or the market is either in a downtrend, now the next thing now you should consider is where now do I place those Fibonacci. So we have different Fibonacci retracement levels. So, let us look at, kindly ask all the questions that you have so that I'll be able to cover. Today is a question and answer session. So ask as many questions as you can so that I'll be able to cover all the questions that you have. Now, when it comes to using the Fibonacci, we have what we call key Fibonacci retracement levels. Okay, we have level 23.6. We have level 23.6. This one, level 23.6, it is usually like the weak support line. This level is whereby maybe when the market comes to that level, you can expect that it is the weakest area of support. So, however, the market can use this level 23.6 as an area of support. So, the next Fibonacci level is level 38.2. This level 38.2 is this is what we call the strongest area of support, strongest support level. When the market breaks this level 38.2, assuming like in this example here, the market was in an uptrend, and then the market started retracing. When the market breaks like this level 23, the next level that you should anticipate the market to reach and continue, and maybe continue with either with an uptrend, is level 38. Level 38 is we usually use it as the strongest area of support. A break of this level 38, when the market breaks level 38, you should know that it shows you that the reversal is highly probable. Okay. Now the next Fibonacci level is level 50. Level 50, it is based on dose theory. and whereby the dose theory usually says that the market usually trades at 50% of the trends. What do I mean by that? If the market was in an uptrend like this, most of the time you find that this retracement here, the market will always retrace at 50% of this trend. That is now the level 50 of the Fibonacci. Lastly, we have level 61.8. We have level 61.8. This level 61.8 is what we call the strongest area of support. This is the strongest area. And this is usually like the last area that you would anticipate the market to. If it was in an uptrend, it is the last area that we would anticipate the market to reverse. Now, when you're using this Fibonacci, there is one thing I've said. We'll say that we're using it when the market is trending. Right? When the market is like this. Now, for me to be able to use a Fibonacci, I would like to see the market, like if the market was in an uptrend, I want to see the market making this series of higher highs and higher lows. Okay. Once I've seen the market is making these levels, I also want to see it starting retracement. Okay. The market was in an uptrend and then it starts to retrace. Okay. Once I've identified that the market has started to retrace now, I can now go and get my Fibonacci to show me areas whereby the market is likely to flicker and continue going upward. Okay. So for this example here, if the market was in an uptrend and I see it that it has already started to go down, I can come here and connect the lowest point and the highest point. Okay. So I will take the most recent swing low and the most recent swing high. Okay. Once I have identified the most recent swing low and the most recent swing high, and then I will stretch now the Fibonacci to the right. What do I mean by that? Let me delete this one here so that I can be able to show you. Now let us look at this. Let us look at this example. I hope our director will be able to zoom up hivi vizuri. Now we have said if you can be able to see clearly the market was in an uptrend. Like in this example here. Clearly we can be able to see the market was in an uptrend. Once I identify the market was in an uptrend and I saw it has started to reverse and going down, it was starting to go like this. It was starting to reverse, or what we call retracement. Now I can use the Fibonacci to show me levels whereby the market might pause and continue with this trend. Basically, since the market was in a downtrend like this, the Fibonacci can show me levels whereby the market is likely to pause and continue going in an uptrend like this. Okay. Now, how I usually do is that I will come and identify the lowest point and the highest point of that trend. Okay. Once I have identified that the lowest and the highest point, I will use now the Fibonacci. If the market was in an uptrend, I will connect the most recent swing low and the most recent swing high, and then now I will stretch the Fibonacci to the right. Once you stretch the Fibonacci to the right, you can be able to see these Fibonacci retracement levels. They appear automatically. You can be able to see levels 23.6, level 38, level 50, as well as level 61.8. Like when the market was retracing like this, for me now, I was waiting to see how the market will react at this level. You can see the market first, it retraced level 23. Once it came back to this level 23.6, once it came back to this, like the point it came to this level 23.6, now that one could have been, once it gives me a confirmation that the market is reversing, that would have been the first place I take my buy. Okay. If the market was in an uptrend, I'll be looking for a buy. Okay. So when it is retracing like this, I won't take any trade. Okay. If the market was in a downtrend like this, I'll be looking for sell. If the market was in an uptrend, I'll be looking for buy positions. Okay. Remember, the trend is usually your friend. Okay. So if the market is in an uptrend, look for buys. If the market is in a downtrend, look for sells. Now for here, the market came and retraced. You see at level 23.8, it gave me this bullish engulfing. This one would have been my own criteria. I could have taken a buy trade, put my stop loss, and I could have made my money when the market was in an uptrend. Now the second chance, the market gave me another second chance. It retraced back, and at this level 23, at this level 38, you see what happened? At this level 38, the market gave me a candlestick confirmation. I usually use candlestick as some of my confirmations of where I want to take a trade. Like in this level here, we can see the market retraced, and at this level, that 8.2, the market gave me a bullish harami. So here, I could have taken my buy trade, put my stop loss here. If I'm not that greedy, I can use level 23.6 as my take profit. That was the first thing. We have said that we use the Fibonacci retracement for entries and exit as well as for adding positions. Now, if I took my buy trade and the market came and broke this area, and then the market started retracing, unaona kwa hii level 38, market broke hii level 23.6, it came back. Unaona venye imenipatia this bullish pin by here. This one would have acted as my next, would have acted as my entry criteria, since I know I can use the Fibonacci for entries as well as for exits. Okay. Okay. So, which other question do you have? I think what I will do is that next week I make sure we will have I will have a presentation about ICT as well as this Fibonacci, that I'll be able to go with it in details. I'll be able to cover it in details. So, first is asking, does ProFarm account have qualification, or do they really rely on experience? Well, I would really recommend before trading for ProFarm, kindly test your strategy. Also, first kindly deposit amount in your trading account and trade it. Once you are profitable on your real account, now you can go and transition now to ProFarms. Because these ProFarms, they are not free of charge. You usually pay a small commitment fee, okay? And once you meet those conditions is when you get funded. So I would recommend, if you are new and you don't know about this ProFarm, kindly make sure you have a working strategy. Kindly also ensure you have a working strategy, and you have already traded on a real account and you have been profitable. Once you know that you have been profitable on a real account, and maybe now what is delaying your success is your capital, you can now go and look for a ProFarm. If you are new, I don't recommend you rushing to buy a ProFarm account, okay? Even though they fund you from $5,000 to $20,000, I usually recommend that first have the knowledge, have a strategy, have experience of trading it on a real account, and then now you can transition to you can now transition to the ProFarm account. Martin Moevi is asking, how do I manage this as a successful trader? That's a very valid question. How can you as a trader manage risk? Each and every Friday, we have been having, each and every Friday we usually cover about risk management. So allow me to just show you small trading, small risk management techniques, okay? The number one goal of any trader should be to protect his capital. Whether you are a beginner or whether you are a beginner or whether you are a guru in trading, one thing you should have is the number one priority should be to protect your capital. And you can employ different trading techniques to protect your capital. One of the risk management techniques that I usually employ personally is that I usually ensure that for each and every trade I take, I usually ensure that I have stop loss. So if you want, one of the risk management techniques that you can have when it comes to trading is always ensure for each and every trade you take, you have put a stop loss, okay? The other technique The other technique that you can use is always ensure that you have good risk to reward ratios. Always have good risk to reward ratios. What do I mean by risk to reward ratios? The amount you stand to gain should always be higher than what you are risking. So if at any particular point I'm risking like $10 per this trade, I should always be targeting to earn $20 or more. Okay. Basically, if I'm risking like 10 pips, supposing I'm risking like 10 pips, what I stand to gain should always be more than 10 people. Okay, this one is also one of the risk management techniques that I usually use so that at least I can be able to make an honest living when it comes to trading, as well as I can be able to protect your account. This is the logic behind having good risk to reward, ratios. Okay, assuming you have like you have like $1,000 account. Okay, and each and every time you take a trade, you are risking $10 per trade. Okay, and each and every trade you take, you are risking $10 per trade. And you have said that the amount you stand to gain should always be higher than what you are risking. Now if you are risking like $10 per trade, you should always target more than $10. Now assuming each and every time you risk $10, you stand to gain $20 or more. Okay, now assuming that now you already have $1,000 account, each and every time you are risking $10, and each and every time the trade goes your way, or each and every time the trade becomes favorable, you are getting $20. Okay, even if you have a very bad strategy, you can always make money when it comes to trade. Even if you have a trading strategy and it wins just 50% of the time and it loses 50% of the time. Now assuming we have a strategy and it wins 50% of the time, it wins, and 50% of the time it loses. Okay, now that means that if you took like if in that strategy you took 20 trades, that means that 10 trades went your way and 10 trades went against you. Now we say that the amount you stand to gain should always be higher than what you are risking. So if these 10 trades went your way, and each and every time this trade went your way, you stand to gain $20. You see, you have made $20, $200. And you are having a bad strategy so that it is just winning 50% of the time. If in 20 trades, 10 trades went against you, and each and every time you lose, you just lose $10. You see, even with a very bad strategy, you can always be at a profit. Because the amount you stand to gain should always be higher than what you are risking. Ili usijipate situation yenye you are stepping 2 steps ahead and 3 steps backward. Okay. Another technique that I usually use when it comes to risk management is that what we call position size. Before I take any trade, I usually know how much am I risking per trade. Okay, and how much I'm risking per trade is when I'm using the lot size. The lot size, it can really help you to know how much you're risking per trade. And nowadays things are very simple, they are very digital. If you like right now, if you Google position size calculator, it will be able to show you, by using this position size calculator, it can be able to calculate for you the right lot size for your account. Okay. Another technique that I usually use when it comes to risk management is that I usually don't over leverage. What do I mean by leverage? Leverage is the ability to use something small to control something big. So, in the Forex market, leverage is the ability to use our small capital to control big position in the market. So, like if you open an account with a Forex broker, the first thing that a Forex broker usually gives you is leverage, okay? Whereby, if you open like an account, the broker will give you something like this, okay? It will tell you to choose a leverage like 1:400, 1:200, 1:100, 1:50, okay? Now, what I mean by this, by leverage is that, or how you can be able to interpret this leverage is that, for each and every dollar you deposit, the broker is giving you $400 more for you to be able to take a certain position in the market, okay? Now, leverage is what really amplifies our profits, and it's what makes our profit to be it's leverage is what makes our profits to be what's the right word? Leverage is what makes our profits to be attainable. So, because if were it not for leverage, our profit would be like $0.0001. Okay. Now, whereas Forex brokers usually issues you with higher leverage, it's not a whereas most of the brokers usually issues you with higher leverage, it's not always good to always take high leverage. Okay. It's because leverage can amplify your profits as well as it can amplify your losses. Okay. Now, I usually recommend don't take a leverage of more than 1:400. There are some brokers that usually have a leverage of 1:2000, 1:unlimited. Okay. Kindly don't fall for that higher leverage, because higher leverage can amplify your profits as well as can amplify your losses. Okay, which other question do we have? Now, what do pro firms consider before funding someone? The pro firm basically they don't consider anything to fund you. What they require is that have the knowledge about market analysis, have a strategy, and you can just go and render your services. So a pro firm doesn't necessarily require you to have anything. Just be a trader, have a strategy, have like very good risk management, because risk management will be what will make you to get funded, or what will make you to lose that trading account or that funded account. Elfaz is asking, kindly explain a bit about SMS strategy. At the moment, your strategy is complicated kidogo, so we can cover it maybe 2 weeks from now. So, Arvin is asking, which brokers do you use and which ones? So, in the country, we have different Forex brokers. In the country, we have different Forex brokers. We have different Forex brokers, and I can recommend any Forex brokers, not in any particular order. The first one that I can recommend is IC Market. I also recommend Windsor Brokers. I also recommend Xness. I also recommend Hot Forex. And some of the brokers that I can recommend to new people that are new in trading. This is because when you're choosing a Forex broker, there are various factors that you should consider. Okay, you can consider like their regulatory compliance. Are they well regulated? And when I talk about regulated, are they well regulated here in the country and outside the country? Okay, you can look at their reputation. You can look at the quality of customer service. You can look at the trading platforms that they are offering. Okay, those are some of the considerations that you should do or you should have before choosing a Forex broker. Virginia is asking advice on how to begin. Well, if you are new in trading and you don't even know how to begin, there is a link on the bio. We usually provide a free Forex PDF. If you are very new in the trading, there is a link for the Telegram. Kindly join so that the PDF you will find it here. You will find it on the Telegram. In addition to that, you can just text and I'll be able to send you the PDF. but I just recommend that you use the link on the Telegram so that you can be able to get that free Forex PDF for beginners. Okay. Now, if you are wondering how you can be able to begin your trading journey, investment, I usually tell people you can never invest in something that you have limited knowledge about. And I can recommend, first of all, Virginia, learn the basics. Learn like the most basics. What is Forex? What is in the Forex market? Then you can now learn about the market analysis, the different ways or the different approaches when it comes to analyzing the market. In addition now to that, after now you have learned like the basics, the market analysis, now you can take us through how you start a day on trading and or how you start your trading. My trading is usually very simple. When it comes to trading, my procedure is usually very simple. Once I arrive in the office, the first thing that I usually this is usually like the procedure that I usually use when it comes to trading. The first thing that I do when I arrive to the office is that I usually check the news. Okay, I usually check whether there are news and economic data released that day that can impact the currencies that I'm trading. Because I know not all news usually affect the market, or not all news usually impact the market so much. I will take note of the high impact news. Okay, like if we have like a high impact news at today at 3:30, at least, and it is for USD, at least I can be able to mitigate, or I can be able to have different trading. I can come with different trading strategies that can mitigate those news. Like if you're having like today at 3:30, if you're having like the card news, at least I know any currency that has Canadian dollar will be affected. Like USD card JPY. So I can be able to plan my trades ahead. Okay. Once now I come in the office, I've checked the news. The next thing now will be to check at my trading plan. I usually look at my trading plan a lot. Okay. The logic is, once I go through my trading plan, it will show me the currencies that I'll be trading, the strategies that I'll be using, as well as the entries and exit criteria, the risk management. So I will go through my trading plan so that at least I can be able to remind myself about my entry criteria as well as the strategies. Okay. Once now I have gone through now my trading plan, the next thing now will be to analyze the market. Okay. Now analyzing the market, it will be based on the strategies that I've identified in my trading plans. Like some of the strategies that I use is support and resistance, I will come and analyze the market using support and resistance. Okay. Once now I have analyzed the market, now the last thing now will be to wait for the setups. Okay. Once nimepata setup, hapo sasa ndipo nitaenda nichukue trades according to my trading strategy. Now we are coming to the end of we are about to end our trading session. This trading session has been very much interactive. Now next week on Friday, we'll be having a free Forex bootcamp. So whether you are a beginner or you are looking forward to refine your skill, this is the perfect opportunity for you to come and learn the ins and out about trading. Okay. Now next week we'll be covering, if you are a beginner and you are wondering how do people make money in this industry, how do people make money in the forex industry, kindly call the number below or text so that you can be able to book your slot. The slots are very few because we'll be taking like 20 students. We'll be taking a maximum of 20 students. So call the number below or text to book your slot. The bootcamp is absolutely free. We are not charging you anything, and we'll be covering everything from the introduction, trading strategies, market analysis. We'll be covering about risk management. We'll also be covering about trading psychology. Okay. Now, if you not be able to come for the physical classes, if you not be able to attend for the physical boot camp, we shall be live here in TikTok. But for the live session, we take only just 1.5 hours, and then we continue with those people that will be here for the physical classes. For those people who don't know, our Brains with Concept, we are located along Thika Road. We are located along Thika Road, Spar Mall, second floor, S47. What we have been covering today is just but a tip of the iceberg about what we usually cover when somebody enrolls to our when somebody enrolls to our Forex Masterclass. Okay, at Brains with Concept, we usually offer different training. We usually offer online training, forex trading training, and the crypto trading training. For the online training, usually the course entails academic writing, article writing, copywriting, and SEO basic. The training goes for 3 to 5 days, running 4 hours a day, and the course goes for 5,000 Kenya shillings for the online training. Okay. Now, for the forex trading training, or for those people that are interested in the forex trading training, for those people that are interested in the forex market, or those people that are new in trading and they are looking maybe to refine their skill, or they are looking maybe they want somebody that can guide them when it comes to the forex trading, we do offer forex trading training. The forex trading training, it will cover from beginner to advanced levels of trading, what we call advanced levels of price action. The mode of learning for the forex trading is first physical here, also via our e-learning portal. We are the only school that has an e-learning portal, as well as for those people that are not able to come here for the physical classes, we usually offer live sessions with the trainer via Zoom session. For the forex trading training, the training goes for 30,000 Kenya shilling. Lastly, we have the crypto, and for the crypto trading training, the course goes for 20,000 Kenya shilling. The training goes for 2 to 3 weeks, learning 4 hours a day. Do you have any other question that people might be asking? So my number, there is a number on the bio there. You can call, you can text. Also, if you are new in trading and even you don't have anything that can guide you, we offer free forex PDF. There is a link on the bio. There is a link on the bio. You can click on it, and then it will direct you to our Telegram group, as well as our number there. You can text so that I'll be able to respond all the queries. Now, lastly, we also have a YouTube channel. Our director, he has a YouTube channel. It's called Alex Vince. This is his YouTube channel. This YouTube channel he usually posts free market analysis for the week. Like if you go to his YouTube channel, you'll be able to see the market analysis for the whole week. In addition to that, also we also have a YouTube channel called Brains with Concept. This one is relatively new. It's one of our brainchild. Is relatively new. This one will be posting each and every live session that we have. So if maybe you have joined right now and you don't know what you have covered, the video that we have covered for today will be uploaded in just less than few hours from now. It will be uploaded. This is the YouTube channel for our director. Now this is the YouTube channel for our director. You can kindly go there and subscribe. We usually post the market analysis each and every Monday. So you can go. This is the YouTube channel for our director. You can go there and kindly, I'm requesting that you can subscribe. In addition to that, we also have this YouTube channel called Brains with Concept. This one we usually post. We'll be posting each and every time we have this session. we'll be posting so that if maybe you have joined us later and you are wondering what had we covered previously, or when you are starting, you'll be able to see all what we have been covering from the time the session started to the time it has ended. It has been an honor that you guys have really joined us. Okay, it has been an honor that you guys have really joined us. I've really enjoyed your company. I've also our director for digital content, our director for the digital content has taken note of all the questions as well as some of the topics that you want us to cover. So since for us here the forex for the forex market or for the forex trading is a passion, each and every week we decided that we'll be covering something new. And today we just covered about how to build a solid trading mindset. Next week we'll be covering, it will be a beginners free forex bootcamp. The other week we'll be covering different trading strategies. So stay tuned, and on Monday, kindly watch out. We'll be having free forex market analysis at 11 a.m.